Long-term analysis of booking holdings with the update that started 2 years ago continue. Let's analyze it together. But first of all, remember to read the disclaimer right here in the video description below. Here we have the 5 different websites that they have, the core business of this company. And you can clearly see, they are famous brands. KAYAK, I really love that one, by the way. And Booking, obviously, Booking.com is the most popular one from the company. And the thing here is like, okay, the services they offer, they are great, they can have like better or worse websites in that sense. But the thing is like they are very diversified in this sector. The thing here is like, obviously, after they have a good services, so they have great websites, but the fundamentals are the fundamentals. And the fundamentals right here below, the quarterly income statements that we have, is good. It's good actually, because right here, maybe you won't see it, but if we go, for instance, to the forecast and you can see the past and the future, the company, it has been performing really great, especially if you go to the annual income statement, right here, you can see how it has been evolving. And actually, 35 analysts from Wall Street, they are very optimistic about it. The average of them is like more than 31% from current levels, Obviously, right now, it's a little bit in the correction territory, because obviously, the market is crashing in general, and this is actually Booking is one of the few that is crashing, but not that much in comparison to other ones. But the thing here is because of this, because look at the EPS that we have and the revenue. So every time they release a quarterly income statement, the reported earnings has been better than the estimate every time in the last, 10 quarters. That's very positive. That's another reason the company is performing as it is. Because obviously when you have a reported earnings, it always goes up. That's the general thing. It's like, okay, so positive surprise factors, it tends to go up. Sometimes it even goes up like huge. 8%, 10% is when you see something after the news, after the earnings. These type of moves are created because of the surprise factor, in comparison between, a comparison between the reported and the estimate. So that's the good thing, Obviously, the problematic thing right now is like we have the next quarter, which is the weaker one in that sense, because of the with the seasonals, because obviously in between January and March we don't have many people traveling around the world. That's the thing. They normally travel in summer, and that's why the best quarter is always in the third one. But in general, if you go to the annual, you can clearly see they are beating expectations every time. And the earnings is increasing every time. That's very positive. As I said, you want to buy stocks that have like this type of growth, like going up again and again and again. Normally that's because the core business is working, the strategy is working, everything is working in the company. And this is the result of that, Going back to technical analysis, okay, because the situation right now is a little bit difficult. The thing here is like they're not in the industry is working really well, tourism, traveling, all that. And the only risk I would say, obviously, apart from this general market crash that is happening right now, but that's actually a good opportunity because you can buy it at a lower price. But I see the only risk is like a war, a general war between countries that could impact the business, but it has to be huge. I hope it doesn't happen. I don't think it's gonna happen, but I hope we won't get to that. But apart from that, over the last wow, if we go to the weekly chart, has been insane. I'm gonna delete this so you can see it better. But that's the thing, look at the last 5 years has been completely insane. If you go to a logarithmic scale, you can see like completely clear. And those who bought the stock in 2002, and look at like what happened in 2008. It was a correction, it was a crash, but you see it as like only minus 70%. I see other stocks in minus 90 at the time, many other stocks. Those who bought the stock at this point in 2001, look at that, they are in more than almost nearly 7,000%. Well, that's insane, that's the reply to the industry. And actually, we go, for instance, I'm gonna load another indicator, and you're gonna like it. It's like the annual net income, because we have more data right here. Look at that. In 2020 it was insane. Yeah, I don't think we're gonna see something like this ever again, because like almost minus 99% of net income in that particular year, I don't think it's gonna happen again. But you can clearly see how it has been evolving. It's like, wow, almost 4.8 billion in 2019, and right now nearly 6 billion of net income, and the next year it seems it's gonna be better, nearly 7 billion, 8 billion, something like that. So obviously this is normally the price action tends to follow this, and you can clearly see that. It's like there are corrections, but normally these corrections are an opportunity when you see this data. When you see like it doesn't add up. It's like it's crashing minus 70%, but the business is good. They are making more money than the previous year. That's an opportunity. That's when you buy the stock and you get, for instance, in this case, those who bought after the crash, after this minus 70% crash, they got nearly 9,000%. You have to be brave, but the data is there, and you can see these opportunities and seize them. You see this net income that is better than the previous year. You see the forecast, and you see, well, it's gonna perform even better in the future. I'm gonna buy it right now after this crash. That's the clever thing to do, but you have to be brave because everything is crashing in that moment. But there is another tip that I could give you. I usually use this because obviously the fundamentals are great, but obviously when you see the oversold territory in the RSI MACD, that can help a lot, and you can clearly see this right here in the weekly chart especially. So the study is the following. Apart from this net income that you see that is good, you need to find the best spots to buy the stock in this particular case. For instance, look at what happened back in March 2020. You buy right here at the bottom at the oversold territory in the RSI and MACD, and bam, look at the rebound. Completely strong. So obviously there are a lot of fluctuations in the market. There are a lot of fluctuations in stocks. When you buy at the bottom of these levels of the RSI and MACD, you don't have to add like very, state-of-the-art indicators. The RSI and MACD, they are used by everybody, and that's the reason it works. It always works. And the thing here is like you buy at the bottom every time it happens. Yeah, you can make the only mistake you can make is that you buy it too soon because it can be in oversold territory, but the correction maybe it hasn't finished yet. But if you hold it and it recovers, that's good, But as long as the net income is positive, remember, guys, because if the company enters into losses, that's gonna be a different situation, especially if they don't if they don't go back to previous levels. If you see like the net income is every quarter worse than the previous one, and you don't see any recover from that, that's the problematic thing, because in this case you have to analyze exactly the market, because you have to see if there is a real explanation of what's happening. For instance, maybe they have a lot of competition, and that's impacting the business. You have to analyze that, because there is a difference between a correction and a company that is going into bankruptcy, and that's the only risk that you have when investing in stocks. You have the market crash, the general market crash, and you have the possible mistake of investing in a company that entered into losses, and then afterwards it goes into bankruptcy, and you have to avoid that, and the fundamentals are there. You can analyze the quarterly income statements or the annual income statements, and you have all the information there. So let us know what you think about this one. Thank you very much for watching, and see you in the next one. Remember to subscribe to TradingST to watch more content like this, and see you in the next video.